There's been a lot of Fed presidents out there talking about what they might do in terms of tapering, but it's Bill Dudley, Ben Bernanke, and Janet Yellen who matter. And I asked Bill yesterday when they're going to start and what the criteria are for changing their policies.
It really depends on how the economic outlook evolves, and as I said in the speech, it's too soon to make that determination. I think at some point in the future, I think we'll see enough improvement in the labor market outlook and become confident that substantial improvement in the outlook lies ahead. And when we get to that point, then that will be the appropriate time to start to dial down the rate of purchases. The other important point to make here is, when we're doing purchases, if we're continuing to do purchases, we're adding stimulus. And people act like if we dial the rate of purchases down, somehow we're tightening monetary policy. What we're actually doing is adding less stimulus.
Well, you're pushing back against the markets. Do you think that they have perhaps gotten ahead of themselves in pushing yields higher?
No, I think the economy has done quite well in the context of lots of fiscal drag. We have fiscal drag this year totaling about 1.75% of GDP, which is a lot of fiscal drag to hit an economy that coming into this year wasn't very strong. The economy looks like it's growing 2.5%. That's a pretty good performance given the amount of restraint that we're seeing from the fiscal authorities.
Well, does that add to your reasons for keeping stimulus as it is, or even possibly dialing it up, that you're pushing back against the fiscal drag?
Well, I guess the way I would characterize it, Mike, is I'm uncertain about what's going to happen to the economic outlook over the near term, because I don't really understand really well how the tug-of-war between the fiscal drag and the improving economy are going to sort of work their way out over the next couple of months. I think 3 or 4 months from now, I think you're going to have a much better sense of, is the economy healthy enough to overcome the fiscal drag or not.
Markets got very excited over the last couple of days when people like John Williams and Charlie Evans suggested we could see tapering by the fall. Is that too optimistic given your outlook?
I think it's possible. I think if the economy does better, if the labor market continues to improve and supported by, economic activity. So it can't just be the labor market. We've seen situations before where we've seen a strong labor market unsupported by very rapid growth in economic activity, and then the labor market improvement petered out. So I think, to me, I want to stress 2 things. It's about the outlook, and it's about my confidence in the outlook. So if I think that we're going to see substantial improvement in the outlook, and as I become more confident that we're going to see substantial improvement in the outlook, then I think that the time will be right to start to dial down the rate of purchases.
Well, you talked about effective communication from policymakers today. Do you feel the need to, can you explain what substantial improvement means?
Well, I think it's actually hard because it depends on a whole bunch of parameters, right? It's not just about what happens to payroll employment growth, because that doesn't tell you about what's going to happen in the future. It's not just about the unemployment rate, because labor participation rates are also important factors driving the unemployment rate. It's about the whole context of the economic outlook. It's really about achieving escape velocity. When are we going to have an economic economy where everything is sort of self-reinforcing?
And we're not there yet.
The jobs generate income, the income generates demand, the demand generates more employment. I don't think we're quite there yet.
Are we at risk of stalling then?
I think there's a little bit of risk given the amount of fiscal drag. If you wrote it down on paper and said, gee, going into this year, the economy is growing 2.5%. Is this an economy where you'd want to apply this much fiscal drag? The answer would probably be no. And so there is a little bit of risk from that source.